Welcome to the SMBU Daily Video. Today's video is I want to weigh less and make more. WTW, a trade example in Weight Watchers. So at the beginning of this week, it was announced that Oprah has taken a really large stake in Weight Watchers. If we take a look at the longer term chart, you can see that Weight Watchers had sold off from its highs quite a bit. And then after this announcement, there was a large pop. Oprah investing in this company really caused interest and tremendous price action to the upside in Weight Watchers. Day one, huge up move. Day two, we had follow through. A typical pattern for a company that receives a bid, is a growth stock, is a momentum stock, is day one, gets a large gap and go. Day two, there's follow through, and then day three, there can be a gap and fail. So the first 2 days, we get a gap and go. Day two, we get a follow through. I wrote on day two, for those actually who were thinking, hey, I think this is overbought. And on day two, there were times where you definitely, sitting on your trading desk, were thinking, this is overbought. When is this thing going to turn around? I understand the Oprah effect should be huge, but this was a stock in the low single digits, and now is trading up near $19. Perhaps this is ready for a pull-in. So I wrote actually on day two, and I tweeted this out, seems like the real short in Weight Watchers is below 1750 and with time. I wanted to see it below 1750, and I wanted time to go by to make the backside of the trade. I didn't want to get out in front of it and trade it as it was going up. I wanted to actually see the stock roll over and get into the backside of the trade. The next day, on day three, I said the same thing. 1750 is an important level in Weight Watchers. So here's a chart of what Weight Watchers look like on day three. And it's a textbook trade. We talked about it today in depth on our trading desk. This is a textbook trade. They don't always look like this. But when we get a trade like this, we have to go back and study it, because generally we need to make more in trades like this. And generally we need to have more trades like this in our trading. So why was it textbook? Big red candle. You can see right on the open, the big red candle signaling a reversal comes into market from above 19 all the way down to 1820. We get our big red candle. Then we get a nice consolidation area between 1820 and 1865-ish. We get time and sideways action in the stock. 1820 is a stubborn support level, and then that breaks. We get our red candle, we get our consolidation, we get our break to the downside. Textbook trading, that's tier one short. Okay? It goes down to 1750, bounces off of 1750 just a little bit, and comes back up to our failure level of around 1820. To me, that's tier two, 18, and a little bit above 18 to add to our short position. Then the stock gets below 1750, add. The stock pulls in and then comes back up to 1750. And this is the area I want to concentrate on. It's acting well. We're below the level. We've got nice volume in the stock. We're below 1750. We're seeing action to the downside. The stock is very clean, and now it pops back up to 1750. And this is an area where you can really be aggressive. Some of the guys on the desk, including myself, walked away from this trade being about half as big after review as we wanted to be, because we were a little bit too cute. We were thinking it would just kind of squeeze us above 1750, have a fake break to the upside, and then fail again, and maybe we'd get into it a little bit. It never really had that. So when that stock starts to roll over again, holds that 1750 resistance level now, support becomes resistance, and pulls back up to there, you can add to your position. And the stock was beautiful. It's really clean. It never breaks the downtrend. We can draw a beautiful downtrend in that stock. You can find areas of consolidation to add when it breaks below that, and there's really not much to do except exit lows of day. This is a textbook trade, and the reason why this is important to actually talk about is that this is a guideline for you to work off of for particular trades, for a reversal trade. I should have made more on this money. There are guys on our desk should have made more. We should have all made more. I want to study it so that we will. Overall, it was a good trade, but it certainly could have been better. The keys for me are wait for the backside of the trade to come in. That 1750 was a huge level. Be aggressive when the stock is holding below it. Let time and price let you get aggressive when we're holding below that level, and then hold it. I mean, there wasn't anything to do in this trade. The good thing that we did about this trade is we just sat in it. Once it gets below and starts to put in the backside of the trade, you're just sitting on it until the trade's much lower. So probably one of the more interesting stocks that people were talking about, that in VRX this week for people to be looking at, and lots of really good opportunity when the backside of the trade was put in. I hope that helps. Perhaps you'll think about adding this to your trading strategy, and let's study this trade. We'll talk to you soon.